We are just, it has just been one shit show.
It sure has. We'll make it through.
All right, welcome back to Home Wisdom with HBH. We're so excited to have one of my very favorite people here today to talk about first-time home buyers. And this is our first time outside of, give me a second here, okay? This is our first time outside of my home shooting the podcast. And let me tell you, it was complicated. It's been complicated. And I want to thank Manny so much for being patient and letting me work through the kinks.
No problem. You're amazing at everything you do.
Oh,
so.
Thank you. Thank you so much. Well, today we're going to be talking about first-time home buyers. But before we do that, I thought it was only fitting that I let my favorite person, well, second favorite, well, fourth favorite, my wife, my two kids, and then Manny, kind of tell us a little bit about himself. I want to know just a little quick overview of who you are, what you bring to the table, and what they can learn from you.
Okay. Well, pleasure to be here. My name is Manny Ortega. I am a loan officer with American Pacific Mortgage. I've been a loan officer for about 6 years now, and I am a proud father of 3 boys, wild boys.
Us and our boys, huh?
Our boys, yes, yes. And I really enjoy traveling, getting to meet a lot of people, great people like yourselves and your family.
Thank you.
And really just enjoying life in general.
Yeah.
Learning from cultures and everything that this world has to give us.
So tell me, what brought you, what made you into lending?
Well, a bad experience. When my wife and I bought our first home, it was a bad experience.
It's okay to say cuss words on here if you want to, Manny, because
Okay.
I have this like nice little thing that goes for the kids, but you can say what you want to me.
Very good. Well, it was a nightmare.
Yeah.
We almost did not close on our house. And I didn't know anything. I didn't know anything about locking an interest rate. I didn't know you had to lock in an interest rate and how long you locked it for. So I remember that day they said, you're supposed to close. And if you don't close today, you're going to have to get a 4%. Ooh. And I was like, why? It's not my fault.
Yeah.
I've turned in everything that you've asked me for. So come to find out, there's a lot of things that could have been done differently. And I figured that if I do this, and by the way, I really enjoy helping out in the community and volunteering. So if I'm already doing that with a lot of people and helping them and guiding them, why not do this as a career?
Right.
So that's why I got involved. Bad experience myself.
Yeah. I think everybody in real estate joins because of one of two things: a terrible, crappy experience or a really great experience.
An inspiring experience.
Yes. So, and I can vouch for that because one of my very good friends, her name is Erica.
Yes.
She just passed, not this Erica. This Erica it's a different Erica. She just passed her real estate exam, and she made a nice little post about me and was like my inspiration. I was her realtor, so that let me feel really good. That
and
she
I
had a
did
good
her
experience.
mortgage loan too. Yes, yes.
He did her mortgage. I did her real estate.
Yes.
And now she's like, I'm really inspired by you guys, and I want to jump in. And so I told her, I said, hey, take the dive. And she did. She passed her exams on the first try. So shout out Erica.
Yes.
Congratulations. We were supposed to have lunch yesterday, but I was down. I was sick yesterday, which you know, because I was also supposed to go to your open house yesterday, but I was sleeping. I slept all day yesterday. I'm a little better today. Manny gave me some good coffee, and now we're going to jump right on in. Yeah. All right. So our first topic is going to be misconceptions of first-time home buyers. Now, I know, and most everybody that does real estate knows, that misconceptions they run rampant in real estate. So do you tell me a little bit about what you've experienced and some of the biggest misconceptions in first-time home buying?
Okay. Well, the first, there are programs for down payment assistance, right? But it's for that meaning. It's for down payment. So aside from a down payment, there's closing cost involved. There's a fee for an appraisal, for a private inspection if one is requested as well. So there's other fees aside from a down payment.
Yeah.
Now a down payment needs to come from your own funds. Okay. It could be a gift, but it cannot come from a state program. Well, it can.
Yeah.
But if you got that covered, then there's still closing costs involved. Now the seller, for instance, there's a lot of times that they'll give you concessions. That's what cannot cover your down payment.
Right.
Okay.
Say that again for me so everybody heard you.
Yes. So if you are getting seller concessions from a seller, you cannot use that as part of your down payment. It could cover your closing cost, it could cover your appraisal, but it cannot cover your down payment.
Yeah, your down payment is your responsibility, you guys. It is your responsibility as a homeowner and a potential homeowner. Luckily for VA, we don't have to really worry about that too much.
Correct.
But all the other, the VA or the FHAs and the conventionals and all the other ones to come with a
Yes.
down payment. Now there's ways around it, like we just talked about, where if you don't have it, maybe we can talk about gifts, we could talk about pulling from your 401k. There's a lot of ways around it. However, the big takeaway here on this misconception is your down payment is 100% your responsibility.
Yes. Now, you mentioned something very important with VAs.
Mhm.
Yes, on a VA loan, you do not need to do a down payment. However, if you don't have the funds for the closing costs,
Mhm.
or for your prepaid,
Mhm.
then that can come from a down payment assistance program.
Yeah.
From a state program. And every state has different programs. So whatever we discussed today, it's primarily for Texas,
Mhm.
but New Mexico has their own program. Colorado has their own program. Every
Everybody
state
has
has
their own.
different. Yes.
But Texas is the best, of course.
Yes.
Well, I can say that because I'm only licensed in Texas, so I can say that without hurting anybody's feelings.
I'm excited because we recently started doing down payment assistance in New Mexico as well.
Amazing. So anybody that's looking to buy in New Mexico, here's the guy right here. And so give me the biggest misconception for down payment that you could think of.
Well, whenever you tell someone you're pre-qualified for a conventional loan,
Mhm.
right away they think, I don't have 20% to
Right.
put down. And that's a mistake. You don't need 20%. If you're a first-time home buyer, you may be able to do 3% down and still do a conventional loan.
Mhm.
Obviously, FHA, the minimum's 3.5%. A lot of people tend to do like 10, 20% down, and that helps them because their mortgage insurance premium is lowered.
Yeah.
Okay. But in a conventional, if you're a first-time home buyer, you can do again the 3% down. But if you do not want to pay the price insurance, then yes, you do need to do 20%, but it's not necessary to get the loan. You're just saving money
In the long run.
in the long
Yeah.
run. Yes, correct.
And I was doing a little FHA reel yesterday for Instagram, and you may have seen it. I'm not too sure, but a lot of people first time home buyers are more geared to an FHA loan. That is because it does require it has a little bit lower credit score requirement, a little bit more leeway, a little bit more grace period or grace in buying, I guess is the best way to say it.
And it allows you to go with a higher debt to income
Mhm,
ratio as
exactly.
well.
Yeah, and the difference, and first time home buyers may not may not ever need this information, but there's two main differences between an FHA and a conventional loan, and it's the way they're backed.
Yes.
Well, that's the main reason, and then the second reason is the interest rate is always going to be different between the two
Yes.
because of the way they're backed.
Yes.
And right now, conventional loans are higher rates than every other loan out there because they're backed by
Fannie and Freddie.
yes. And so it's one of those things where knowing the differences and knowing and understanding the difference between an FHA and a conventional loan, whereas maybe you're a first time home buyer, but it may be in your best interest to go conventional and it may be in your best interest to go FHA.
Correct.
And we won't know that until we know that.
A lot of times borrowers decide to start looking at properties, especially if you're a first-time home buyer, before you start looking at properties, know how much you qualify
Yeah.
for. Because I just, especially recently, I've been getting a lot of phone calls from clients saying, hey, I need to get pre-qualified for this $350,000 home. But yet, once we get them pre-qualified, we verified the income, the assets, and so forth. They qualify, but once they let them know that, hey, your payment is about 3,000,
Yeah.
3,400, they're like, oh, I
Oh,
thought it
wow.
was
Yeah.
1,300.
Yeah.
So knowing how much you qualify for and knowing how much you feel comfortable paying on a mortgage payment is crucial.
Absolutely. And that is one of the very first conversations. If you sit across the table from me and you're about to buy a house from me, I don't care if it's your first or your 100th home. We are going to talk about not how much you're qualified for. We're going to talk about how much you want to pay on your mortgage.
Yes.
Because just because you're qualified for a $500,000 home does not mean that you need or should be paying $500,000. More technical difficulties, like we were saying.
So one of the things that I always like to discuss with clients is what they like to spend their money on.
Yeah.
If they like to travel a lot, or they like to spend extra money on certain things, or they have to take care of their parents, help financially, whatever it is that they like to do, I want to make sure that when they buy a house, they still have the time and they have the money, more than anything, the money,
Yeah.
to be able to still accommodate those things that are important to them.
Right.
Because just because they qualify for a $3,000-4,000 payment, that doesn't mean that that's what's best for them.
Mm-hmm.
So I always like to make sure that they're aware of things like this.
Yeah, just because you can doesn't mean you should.
Exactly.
And that's a big takeaway of this topic as well, is being a first-time home buyer means that you're taking this big responsibility for the first time in your life.
Yes.
It is one of the biggest, if not the biggest, responsibilities you're going to have. It is most definitely the biggest financial responsibilities that you're going to have, because there should be nothing in this world that you pay more for than where you house yourself and your family.
Exactly.
And so you got to take this very serious. You have to understand that this is, in most cases, this is a 30-year commitment.
Yes.
And yes, I understand most first-time home buyers, they move out within 3 to 5 years, but sometimes it's your forever home.
Yes.
And regardless, when you sign on that dotted line, it is a 30-year commitment. 15 years, there's a lot of different options, but for the most part, it is a 30-year commitment.
Yes.
And so you need to understand and take this as a big responsibility, that it is a financial decision. We're investing in our future. We're investing in our family. And it takes a lot of practice to put into it, and it takes a lot of effort to make it right. But if you do it the right way, we're going to be golden.
Yeah.
I want to ask a hypothetical. All right.
Okay.
So let's say I'm an investor, or I want to be an investor. My first time ever buying a house, and I'm doing it as an investment. What would you recommend me do?
Well, and it's weird you asked me that. I mean, you asked me this question, right? I recently had a borrower who called me, and he says, I need, what are your interest rates for investment loans? So I started digging a little bit further, and I said, okay, where are you living? The client was living in Dallas. And he says, well, I want to buy a property in El Paso. And I said, well, for an investment property, you're probably looking at 20% down. Well, come to find out, after a detailed conversation, I find out that he was buying this property for his parents to live in.
Mm-hmm.
Now, his parents could not afford to get a loan by themselves. So what he did, and I explained this to him, I said, if you go conventional, you can do 5% down, and you have the opportunity to buy this house and put it under your name. Mm-hmm. Loan is under your name, title's under your name. However, you're getting it for your parents to live in. So you don't have to buy it as an investment property.
Yeah.
So when you say investment, it just has to make sure that it is an investment property.
Yeah.
Because sometimes if we don't communicate the actual reasons
intent.
Of what, the intent of buying a property, then, it might be misclassified, or you may end up getting the wrong interest rate.
Yeah.
Or, things might change.
Well, and another thing, I'm actually really glad we're talking about this now, because I have a lot of people who go, oh, well, I want to buy a triplex or a duplex. Mm-hmm. And I want to use it as an investment, right?
Okay.
And they asked me, how can I get away from not paying the 20%? Would an option be, could you live in one?
Absolutely.
Tell me a little bit about that.
Most of the loan programs will allow you to occupy one unit, mm-hmm. and then use the rental income that is derived from the other properties.
Yeah.
So people are smart, except there's not a lot of options.
Yeah, of course.
If I knew this when I bought my first house, I would have purchased a
duplex or a triplex or a fourplex.
I would have gone for a fourplex, which is a max that you can get a loan for as a QM, as a qualified mortgage, right? If it's more than 4 units, then it may be a different type of product, but you can definitely do that. I mean, I will encourage my children that, mm-hmm. when they buy their first home, what a better way to do it than to buy
multifamily.
A fourplex. Multifamily. Live in one unit, mm-hmm. but you have to occupy it.
Yes,
if it's your primary residence,
please live in it.
Yes, live in it, and then rent the other units.
Yeah. And your tenants don't even have to know that you're the owner of the property.
Correct.
I mean, you could always you could always service out to a property management team
Yes.
and let them deal with the complexities of being a landlord.
Exactly.
And you can just live there in peace, and they only contact you when they need you.
Yes.
And that's what I tell a lot of people who are thinking about investing for the first time. And they're like, well, you know, I don't know, blah, blah, blah. Well, okay, have you bought a home before? No. Well, then why not buy a home, live in it, and do the 2 or 3 units, the rest of the units you go ahead and rent those out. And a lot of people don't understand that you can do that. Yes, it's complicated. Yes, it's a little bit more headache and painful and all that wonderful stuff, and it's more expensive because we're getting 2, 3, 4, 5 well, not 5, but 2, 3, 4 properties.
Mm-hmm.
So we're going to pay a little bit more money. However, if you get a really high yielding investment, or duplex or triplex or quadplex that is giving you a lot of money, it could really benefit you to take that as an opportunity to first and foremost put your foot in the portfolio investment property.
Right.
And then not only that, you're housing yourself too.
Exactly.
And you only have to live there for a year.
Correct.
And once you can move out, rent that, and now guess what? We have a portfolio equity.
Yes.
And now we can use your equity, and we can use your portfolio to go and find you another investment. Mm-hmm. Because now we're getting really off topic. Because there are so many loans out there for investors.
Right.
And everyone is a first-time home buyer at some point in their life.
Yes. Actually, do you know who's considered a first-time home buyer?
Tell me.
Someone who has not owned a property for the last 3 years.
Ah.
That's who's considered quote unquote first-time home buyer.
Yeah.
So as long as if you owned a property 10 years ago, you sold it, and now it's been 4 years and you haven't owned a property, you're now considered a first-time home buyer.
Yeah. So keep that in mind too, because that's really valuable too. So we are having some serious technical difficulties here. But and I'm sure you guys are hearing that as well.
Yes.
So we are just, it has just been one shit show.
It sure has. We'll make it through.
There's growing pains, right? So, and then you'll see me and Manny staring off into the distance over here, because every second we take our eye off of it, it shuts down on me. So who freaking knows what's happening? But that is the beauty of building a podcast. You just never know what's going to happen. You never know where you stop, where you start, and we're going to splice this thing together. It's going to be one ghetto shit storm. All right. So we were talking about programs that are available for first-time home buyers. And I think we were talking a little bit about the interest rate being, 5.
Right now, TDHCA has a program that if you buy in a targeted area, and if you fall within the income limits, you can get an interest rate as low as a 5.375.
Wow.
Now, they don't help you. There's no down payment assistance, but you get the lower interest rate, which in the long run, it's gonna. I mean, it pays off.
And
if
you can pay your own down payment, who.
Exactly.
That's maybe, and how do you qualify for that? So something like that.
So there's income limits, and they take in consideration the income from everyone who lives in the property or who will be residing in the property. And then as long as you don't surpass that, and you're a first-time home buyer, then you should be good.
Now, what if, let's say you and your wife were going to do it, and your mother was going to live with you? Would they even take in your mother's consideration?
No, they won't.
I'm sorry if that threw you off.
No.
Actually, it's a little common here, right? It's pretty common here.
As a matter of fact, I have a borrower right now who is in this particular program, and their children are 18 and 21. And we called the state program, and absolutely, there's no issue because the children are not in the loan and they're not going to be in the title. Okay, perfect. So as long as they're not in title, then
Okay, because here in El Paso, that's kind of a common thing.
Yes.
Whether it's your children are living with you or your parents are living with you, it's kind of common. So I just want to make sure, if you have more questions about that particular type of program, reach out to Manny. He'll help you out with it. For realtors, we and I know some realtors know the programs like the back of their hand. You know me, I like to stay in my lane. Go ahead.
And not only that, but let me tell you, Erica, even if you know it perfectly today,
It changes.
It changes.
Yeah.
Tomorrow, things might change. The down payment assistance might
Mhm.
change. The interest rate might change. So everything changes. The guidelines, for instance, this year, now if you are surpassing more than 1.5% of what you were paying in rent, then you need to have 3 months of reserves. So there's a lot of caveats and things that change, guidelines that change
Yeah.
from time to time, that it is important that you do allow the expert to answer these questions.
Right.
Because what you may know, you may not have gotten an update from the program to let you know if anything has changed.
Yeah,
So,
and that's why I tell people, my job is to negotiate and get you in the best deal possible. Anything to do with numbers, while I can estimate and I have this cool little app and it does all this wonderful stuff for me, at the end of the day, your loan officer, whether it's Manny or any other loan officer out there, they're the person that you need to be talking about programs available to you, all those wonderful stuff, because I may not know the I may not know everything there is to know
right,
about your loan and who you are as a buyer. That maybe there's stuff you don't want me to know, and I can't help you get into the right thing. But your loan officer, there's no hiding.
exactly.
Know everything.
And I don't know if I mentioned this already, but even for veterans, you don't need, obviously, you don't need a down payment,
Yeah.
so you don't need down payment assistance, but the program will help you pay for the closing costs.
Exactly.
And that will allow you to present a stronger offer whenever you do like a property, because you
Mhm.
don't have to ask for closing costs. You don't have to, you
Yeah.
don't have to come up with additional funds.
Yeah.
So yeah, it's, every case is different, every program is different,
Right.
so.
And it's a case by case, a buyer by buyer, house by house. And that's what I tell everybody. It doesn't matter what you're, and I think we've already used this as an example. It does not matter what your uncle bought their house for. You are a totally different buyer. It is a totally different loan, and this is a totally different house.
Exactly.
And this ain't the 1980s or 1990s. We're not getting houses for $120,000 anymore.
Correct.
It's just not happening.
I know. I know. My mom bought her house, I think, for like $52,000 or $53,000 in the West Side.
Imagine that.
Yeah.
All right, so now we're gonna talk about my favorite topic. We found the house. We're ready to proceed. We're ready to rock and roll. We got approved. We know what we're going to spend on a monthly payment. What now?
Okay. So obviously, when we pre-qualify clients, we ask for a series of documentation, right?
Mhm.
Pay stubs, W-2s, ID, all that good stuff, bank statements. So what we do is we notify the borrower what the estimated payment is and so forth. They have the opportunity to shop for insurance. That's one of the first things that we want to make sure that they look for
Mhm.
up front, so that we can ensure that we're staying within the debt to income ratio that we need to have.
Right.
Once everything looks great, they've got their insurance, they got the documentation, that we send initial disclosures to the borrower. The initial disclosures have a whole bunch of documents that the government, not the company,
The
mandates.
government.
Yes,
The government.
mandates that we have,
Yeah.
or that we present to all the borrowers.
Mhm.
In that initial disclosures, we include what's called the intent to proceed.
Mhm.
So once they sign that, then we have the opportunity to order an appraisal. Typically, I always like to wait until the inspection and the
Mhm.
option period ends, so that we know for sure that they're going to
Mhm.
proceed.
You're not getting that money back if you give it.
Correct.
Yeah.
Yeah. So we order the appraisal, then the file goes into processing. The processor's job is to make sure that the file is ready for an underwriter to review the file. So they want to make sure that the income is verified. They want to make sure that your bank statements don't show extra money
Mhm.
coming out of your bank account or coming in, and that it cannot be sourced. So that's why we always tell borrowers, do not make cash deposits into your bank account. If you are the type of person who will save money at home, you need to talk to your loan officer before you make any deposits into your bank account.
$100,000 underneath your mattress at home.
You need to let me know where you live. Yes,
Come sleep on your mattress.
Yes.
Time or two.
yes. And especially in the Hispanic culture, it's very common for people to say, I don't trust the bank, so
Yeah.
I'm just going to save the money at home.
Oh man.
Don't do it, because cash cannot be sourced.
And if you are gonna do it, understand when you're ready to buy a house, you need to prepare that you're
Yes.
not gonna be able to get a house that next month.
Correct.
It's gonna take time to source that money, put it into your account, and make it available to you as a home buyer.
Correct.
Okay.
So
So if you have the $100,000, Okay, invite me over. Let me have a little bit, and then we'll source it.
Yes. We'll have a sleepover.
We'll talk about how to fix this, and we'll make sure that we get it into your account the
Yes.
right way, because
Yes.
it is crucial that we do it the right way.
Yes.
Okay.
So once we have all the documentation, the underwriter will review the file and then they will issue what's considered a conditional approval.
Mhm.
Conditional because they will give you conditions that you need to support your file. So it might be an explanation of where this money came from. It might be sourcing your earnest money and make sure that it came out of your bank account. It might be that your appraisal has not come in, so we need to make sure that it, the house appraises.
Yeah.
So once we get that conditional approval, either the loan officer, the processor, or the loan officer assistant will request the conditions from the borrower. Once we have everything, we will submit the file back into underwriting and we're ready to close.
Perfect. So I'm going to talk a little bit about on the realtor side of the contract.
Okay.
Okay. Because a lot of people are not prepared for, hey, we found a house, now what? And for you, there's a lot of, holy crap, this is so much paperwork. This is so much. And I try to tell my buyers, whatever you give him, chances are you're going to have to give it to him 3 times. And it's not just you, it's all loan officers, because paperwork gets misplaced, or this person needs it and this person doesn't want to send it. So we got to send it to this person that's got to send it to this person. It's going to be frustrating. It is, there's no way around it. Paperwork is frustrating. That's why I have someone do it for me. That's shout out to my transaction coordinator, Summer.
There you go.
So, as a buyer, you have to understand that no one is going to do your paperwork for you. You have to do it for yourself. And it's going to be stressful. It's going to be, oh my gosh, I already gave him this. I already did this. Doesn't matter. You got to do it anyways. If he's asking for it, you
Yes.
got to do it. And beyond that, here's what I want you to take away. And I'm going to talk directly to the camera. If you're buying a house, it is not free.
Correct.
It's going to cost you. It's going to cost you some money. I'm only speaking for El Paso and my surrounding neighborhoods. I can't speak for California. I can't speak for all these other states and cities and all this stuff. I can only speak for El Paso. You need to be prepared for earnest, option, inspection, if you're a VA, termites, and appraisal. There are 5 things that you need to be prepared for. Matter of fact, I highly recommend termite report for all transactions, but it's only required for VA here in El Paso. Can't speak anywhere else.
Unless the appraiser makes a note.
Yes, yeah, unless the appraiser says, hey, I think there's some activity here, fix it. There are 5 things you need to worry about. Earnest. Let's break it down. I can only speak for El Paso, and I can only speak for the deals that I do, right? It can be as cheap as $500 for an earnest, or it can go all the way up to a few $1,000s, depending on the type of home you're going for. Obviously, it's about $1,000. That's what I tell people. Be prepared for about $1,000. Earnest or option period. Did I say earnest or option? That was for earnest.
That was yes, earnest.
For your option period, a good rule of thumb is $10 a day. That's kind of where we're at here in El Paso.
Mhm.
And again, I know some people are going to be like, no, we're not. I write a lot of contracts. I get a lot of contracts accepted.
Yes.
That is 100% where we're at. $10 a day. $70 for 7 days, $100 for 10 days. I write $100 for 10 days because that gives me time to do what I need to do and all that wonderful stuff. Then you're going to have your inspection report. An inspection report would cost anywhere from $200 to $500, depending on how big the house is and what we need to be doing. A termite inspection is going to be, I think it actually just went up. I think it just
I'm
went up.
sure.
I think it went up to 125. That's the cheapest in El Paso. Used to be 85. Now it's about 100. So let's estimate $120. Okay.
Okay.
And then you're going to have your appraisal, and your appraisal, if your VA, is the most expensive thing other than your earnest money, but you get your earnest money back if we close. We'll go over that in a second. Your appraisal is $880 if you're a VA. If you're conventional, if you're FHA, it can vary.
About $650.
Yeah, it can vary. If you want an expedited one, obviously it's going to be a little bit more expensive. But I tell everybody, VA or not, be prepared for $880 just to save my butt every time. Okay, be prepared for that. So when you sit down and we're talking about buying a house, those are numbers that I cannot change for you. I cannot make those numbers go away. I cannot negotiate those numbers away. I can't say, hey, Mr. Seller of your house, here's $1. I want to buy your house. Here's an earnest money of $1. I can't do it. No agent in El Paso can do it. So we have to, or in any place in the world can do it. So we have to be mindful that when we're buying a house, there are some fees that are just not, we cannot make them go away.
Correct.
And those are those things. So if you're a first time home buyer, you need all of that. So I tell everybody $3,000. If you got $3,000 saved away for buying a house, I can get you in a home.
Now, I think it's important for you to elaborate a little bit. What is the earnest money good for? What does it do?
So earnest money tells you, Mr. Seller, hey, I really like your house and I really, really want to buy this property. And so here's $1,000 or $500 or $2,000 of my money, and I'm going to put it in a third party account, right?
Okay.
A title account,
Title
escrow
company.
account. And I'm going to give it to them and they're going to hold on to it for the next 30, 45 days, however long it takes for us to close. And it's good faith money to tell you that I want to buy your house.
Okay.
However, I'm also going to give $100 of option money for a 10-day period.
Exactly.
And in that 10 days, if I find any reason why I want to back out of this home,
You can do so.
I can do so. And you're going to give me my $1,000 earnest or $2,000 or whatever I'm asking for back. And the only thing I'm losing at that point is my $100 option.
Your option. Yes.
However, and there's going to be that word, right?
However,
If we do an inspection and we do a termite and we order appraisal, I cannot get you those things back.
correct. Because it's a service that's already been rendered.
It's been rendered,
Yes.
it's been paid for, it's gotten done.
Yes.
And we can negotiate the closing costs and that'll take care of some of the appraisals and things like that. But one thing one thing for certain that I know you're not going to get back is your inspection.
Correct.
That is your peace of mind. That is
Yes.
your I feel good blanket. It makes you understand that the house you're buying is in good shape. The roof ain't about to cave in on you. Your HVAC system ain't messed up. Your plumbing ain't messed up. Your electrical's not messed up.
Foundation.
Your foundation's not messed up. You don't have termites. You don't have all those wonderful things. And so I know that's an overview and a lot of information right there.
Yes.
And that's why it's really important to understand that if you're going to sit down with me, I'm going to take about an hour of your time
Yes.
to really, really go over step by step what I need from you.
And that's what a great agent should do, is explain all of these things. You have no idea how many times I get phone calls from clients saying, well, I already, gave $2,000. What else do you want? Well,
Yeah.
let me explain. Let me break it down for you.
Yeah.
Let me explain what an earnest money is. Let me explain to you what an option,
Yeah.
period is, and so forth.
And that's not your job to explain.
I-
So, but I understand that if you are not sitting down with your agent and your agent is not advising you with these things to come, especially the first time home buyer, then you're probably getting a disservice a little bit.
Yes.
Because, and I'm not talking on anybody,
Right.
but I'm just saying, if you're not getting that information, you can't have a good transaction.
Exactly. Or you're not understanding what it is.
And it's a blind eye.
Yes.
And how are you, if you're not getting that information up front, how are you going to look what an inspection report looks like?
Right.
Because guess what? It is your realtor's responsibility to help you understand that inspection report. And gosh, that's a whole different can of worms.
And let me tell you, I think one thing that's really important is a realtor might be able to explain a lot of things to borrowers. And a lot of times borrowers, they do think, well, this is a stupid question. There's no stupid questions. I mean, nobody's born knowing how to buy a house. So that's why it's always important for you to say, hey, I did not understand this clearly, or hey, this just does not make sense. Explain it to me. And, as you were explaining it to a kindergarten student, everyone's different. We understand differently. Sometimes I have to meet with borrowers face to face and just put everything in paper, write it down. They take notes and it makes sense. So it's just personalizing the service that we cater to our clients.
Yeah. All right. Once again, technical difficulties.
Again.
But here we are. Look, this camera has been tried and true. Okay.
Yes.
This is my phone camera. Hello. That camera over there is my new camera that I'm just learning everything about. And so now since that died, because we've had so many technical difficulties, now we're out on my FaceTime on my camera and on my phone. So while that charges, but look, technical difficulties or not, this is very important information. And so we were just talking about understanding and communicating with your buyers, and understanding as a first-time home buyer, it is important for you to do your due diligence, to pick the right realtor, to pick the right loan officer, and you need to have an understanding that there's so much information out there. And yes, it can get a little crazy.
Yes.
It can get cloudy, and there can be so much. But if you have the right team, and I think that's where we left off, talking about how we're in a three-way relationship.
Yes. The realtor, the loan officer, and the buyer.
Yes, we have to have a really good relationship with each other, because we may fight, we may not agree, we may not always have a kumbaya, but our job, and when I say we, I mean me and you.
Yes.
Our job is to benefit and fight for them.
Yes.
And at the end of the day, we're got to be on the same page with them to make sure that they're getting taken care of.
Yes.
Okay, so now we're going to just kind of talk a little bit outside of the script, I guess is the best way to say it. Even though, by the way, this is not scripted. It is scripted, but it's not scripted, because everybody that knows me knows I go off the rails quite a lot.
We both do.
Yes. Hence why we've been here since 11. And what time is it? I don't know, 3? Almost 3. But most of that is because technology is stupid.
Yes.
But we're getting there. But when me and Manny first met, and it's funny because I'm still friends with the very, very, very first clients that we ever had. Mm-hmm. They came to me pre-approved through you. So Denise.
Yes.
I think that wasn't it Denise? Yes. And her husband and her kids, at the time, I think she just had the 2 boys. Yes. I think since then they've had another boy.
Okay.
Yes. And we met through them. And my first impression was like, I don't know this guy. You know, I was very set in my ways, like, I don't know this guy, blah, 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 blah. Like, I only like who I like, but I was green around the gills, right? I was a new agent that had been told that we stick with who we stick with. Yes. And so I just, out of sight, out of mind. We closed that deal. It was phenomenal, by the way. No problems. I think there was like a few hiccups here and there, but we worked through them like super smooth, super easy. You remember? I know you remember that. And then we kind of just.
I think there was a second client, as a matter of fact, that came to you, and I had pre-qualified them, and you said, okay, well, it's been 2 people that that have come to me pre-qualified by you. So what is it that you're doing?
Yes.
And I said, let's get together. Let me introduce myself, get to know each other, and see if we're the right fit to be able to work with you. Now, keep in mind, I'm not your typical 8 to 5 loan officer.
Yes, that is very, very true.
And I'll say this: there was a military family. Actually, the gentleman who I was assisting, he was in the military, and he was in the Middle East. And I remember he says, "Well, the only time I can talk to you is at 3 a.m. your time." And I said, "Great, thank you for letting me know. I will, set my alarm up, and I'll be up by 2:45." And I'll be ready to take your phone call by 3. And he says, really, you'll do that? Absolutely. Yeah. I mean, I always like to cater to my clients and make it as best as we can for them.
Yeah.
I have a family, so I try to be as available as I can. And when I'm not, then I'm either at church or I'm doing something important with my kids. But aside from that, I will always try to accommodate.
Yeah.
And I remember discussing this with you, and you said, okay, we'll see what happens. And then we started working together with more clients, and I was able to prove to you my availability and my efforts to be, as available as I could with the clients and so forth. And get your pre-qualifications letter on a Sunday or Saturday.
Just like that.
Yes.
Yeah. And anyone that knows me knows that, like, it's a little hard to break my exterior shell. It's a little hard to get into my inner circle, I guess is the best way to say it. I'm very at an arm's length, I guess is the best way to say it. But once you become someone I trust, it's a loyalty that goes beyond anything. And I would say that above all else, my loyalty to you is always going to be there, because you have not only been my loan officer on my personal home loans, you have fixed so many beep ups of other people. I've brought you shit showcases all the time. Ultimately, it's been a great partnership. It's been a great friendship. Above all else, it's the best friendship that I think I have in real estate. And it's been great to have you as a mentor and a friend, and one of my biggest supporters, which is really nice to have. See, why did it give me a thumbs up just then? Did you see that? Yes. But it's still recording. Like, make that make sense. I don't know. Who knows? This shit is crazy. But yeah, so for me, I think you're the best, if not one of the best in the loan officer field. I know that your communication is second to none. I know that I could trust you with anything. Your clients can trust you with anything. So it's been a pleasure to get to know you and grow with you. And, you were with me when I was on the team, and you were a big part of the reason why I felt the courage to create this right here on my chest. And so, I just want to thank you for that. And as I'm getting this platform started with this podcast, it was really crucial for me to start out with people that I trusted, and that helped me grow. And it was really important for me to just really pick the right people, I guess is the right way to say it. So I want to say thank you for that.
Thank you.
And then also want to just kind of shout out a few of our closings together, and then we'll talk about those people a little bit too. Okay?
Yes, absolutely.
All right. So we're going to talk about, I think we already touched on Erica and John.
Yes.
Which was one of my favorite deals with you. But we're also going to talk a little bit about Tremaine and Fred.
Yes. And
Tremaine and Fred are very dear, close friends of mine. Matter of fact, your brother, Mondo, Fred, and I golf quite occasionally.
Yes.
Fred and Tremaine came here from Hawaii. They were PCSing here to Hawaii. We are going to leave a lot of the details out because I don't want to ruffle any feathers or cross any bridges or anything like that with the people that, the other side of the story. That was one of the craziest experiences. And Tremaine and Fred they will probably get on here and tell you, like, if it wouldn't be for this guy sitting beside me right now, they would not be in their houses right now, or their house right now. It was unbelievable, the disservice that they were getting from their lender. I think it was upwards of a $16,000 mistake. Am I wrong or am I right on that?
I think it was higher than that.
Yeah. And I'm sure if Tremaine sees this or she hears this, she will make a comment. I'm sure she will make a comment. But you won a cheerleader for life in that situation, I believe, because you guys, it was so stressful. It was very stressful, and it was stressful for her, for Fred, for me, for you. And you came in like a freaking superhero with 2 weeks to close, and you got that SHIT done.
Yes. And
it was an easy fix. It was an easy fix and a big F up that almost cost them $17,000 or more that they lost on top of a house.
Yes.
Because it was money that they'd already spent. They had already done what they were told they needed to do, which was stupid. Let's not go too far into it. But
yes.
And you came in like I said, like superhero.
And here's one important thing. When you have a loan officer that's asking you to pay something off, be careful. I always tell people, if it's for debt to income ratio purposes, it's better if you pay it at closing rather than pay it up front.
Yeah. Because
we want to make sure that everything has, been done correctly, and you're going to close in this property before you spend, $1,000, $5,000, $10,000, $15,000, $20,000, $30,000 on paying something off to make something work. So always get a second opinion.
Or third or fourth. It's like going to the doctor. Hey, I know something feels off in my chest. Something feels off. Oh no, it's just stress. Maybe you should get a second opinion.
Yes.
And the same thing goes with real estate. hey, you got to pay $15,000 and this to buy this. Excuse me? Maybe I should get a second opinion on that.
Exactly.
And unfortunately for Tremaine and Fred, we were stuck between a rock and a hard place. They were PCS to El Paso. I think we didn't have much time. We found a house that they really loved. They were so excited. By the way, they love their home. They're very happy in their home. It's nothing towards the builder. They're ecstatic about their home. Matter of fact, we just had some issues with their property taxes, and we got that all fixed and finalized with the builder and all that wonderful stuff. So hopefully they like hearing this. They did an amazing job helping them. Even during the transaction, when they could have shut down and said, absolutely not, we're putting the house back on the market, really came through for us, I think, and really was like, no, we understand. And they honored everything. And I got to give them credit where credit is due. They honored everything that was originally on the contract and gave it to you and allowed you to do your magic.
Yes.
To this, and they understand that if you want a guy that can work magic, he's right here. Give him a chance.
Yes.
And I'm sure they're not listening to me, but if they are,
I'm sure they will.
Yeah. So it was nice to see them do something nice, and it was nice to see you come in, swoop in, fix it, because honestly there was no better people that deserved the outcome that they got. Phenomenal house, beautiful home, happy in their home. And now I got a golf buddy, and we get to golf and have fun, and our families get to hang out.
I need to take some golf lessons.
He does, you guys, he does.
Maybe I can start joining you guys soon.
Yes, absolutely. At least as my you can drive me around the course.
Okay, I can do that. I can drive.
All right. Well, I want to thank you again for coming on the podcast. I think this is going to about wrap it up. I'm super happy that you stuck with me through all the technical difficulties of today. And want to thank, what building are we in?
Regis.
Regis, right? I want to thank Regis for allowing us to use their conference room. I don't know if you can see, but we're right here in the backdrop of El Paso. There it is. I got to look at that camera because that camera's not going to be here. So the backdrop here, it's beautiful. I'm super happy that we got to do this. All right, Manny. Well, any final thoughts?
Above all, I just want to say thank you. Thank you again for the opportunity of being here.
Mm-hmm.
Erica has got to be one of the best, if not the best, realtors here in El Paso.
Oh, thank you.
The fact that you are a veteran yourself speaks, very highly of you as an individual that you are, how committed you are to your clients.
Mm-hmm.
And you're knowledgeable, you're hardworking. So you guys are in great hands with Erica. She is an amazing realtor. Absolutely.
I'm also a fun time.
Yes. You will always have a fun time with Erica. So thank you again. Thank you for taking care of all these families here in El Paso. We need more realtors like you.
Oh.
And thank you for everything you do for all of us.
Oh, well, thank you. It's the joy of my life getting to watch people go from not homeowners to homeowners. It's a passion of mine. I created Homes by Harshaw because I wanted to build a business that reflected my beliefs.
And that can be sensed. I mean, everyone can feel how enthusiastic and how dedicated and how caring you are and everything that you have to give. So congratulations.
Thank you. Yeah, we're still building, okay? We're still building Homes by Harshaw, and the sky is the limit here. It's a one-man show. I know I say that a lot. I'm just me, but I'm always just gonna be me. But that's the beauty of it.
And I'll say you have the strongest foundation, and that's what's important. You build strong from the bottom, and it just goes up.
Thank you so much. I appreciate you,
Thank
Manny.
you.
Okay. All right. Well, thanks for joining Home Wisdom with HBH. Today, we had our special guest, Manny, and we talked about first-time home buyers. Follow his social media. We're going to link it below in the description. For those of you who are listening on all your streaming devices, please go to your social media, type in Manny Ortega. You'll find him right then and there. Or you can go straight to Homes by Harshaw, and he's right there on almost everything that I do. He's either commenting, he's on the video, he's tagged in it in some way, shape, or form. So please go follow him. He's very knowledgeable. Give him a call if you're looking into buying a house, whether it's your first home, your second home, your gazillion home, whether you're a first-time home buyer, an investor, whether you're selling, whether you're doing all those wonderful things. It's always good to have a loan officer in your back pocket. So please reach out to him. I look forward to hearing the really good stories that he's going to tell me. Hey, I got this client and they called me because of the podcast. Okay.
Yes.
Well, of course, it wouldn't be a true technical difficulty podcast without not having an outro. So I just wanted to take this time to do a quick little thank you, Manny, and give you guys a little outro of the video. It means the world to me to have Manny on this podcast, and I'm so glad that he stuck by me all day while we were shooting this podcast with so many technical difficulties. And I would really appreciate it if all of you listeners and all of you followers could go to his social media. All you have to do is type in Manny Ortega and follow him on all social media. And of course, follow Home Wisdom with HBH on all your streaming platforms and YouTube. And of course, Homes by Harshaw on all other social media. Hey, don't forget to subscribe, share, and drop a review. And we appreciate you. And to everyone out there, remember, whether you're buying, selling, or just curious about the market, Home Wisdom with HBH is your go-to podcast for all things real estate. From our house to yours, keep building your real estate wisdom. More knowledge today means more power tomorrow. Later.